Okay, summer's over and everybody's been active. What's the latest at FASB and AICPA? This is the IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Brad Muniz, the host for the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing at Sobel & Company. A quick disclaimer, the views and statements expressed herein are my own and not necessarily those of the New Jersey Society of CPAs or Sobel & Company. As a reminder, I go through some brief information on various topics of the FASB, AICPA, and other areas, just to give you a little update what's happened over the past couple weeks, and it has been active. I don't know if you remember last episode, I set up a couple items because they've been kind of relaxed during the summer. Well, this week I had 20 different items that I was able to come up with and talk about, and I'm not going to go over all 20 with you. I'm going to go over around 8 or 9 of them just to give you a flavor of what's going on. But I recommend that you look at some of these, the CPA Daily, the New Jersey Society news information to try and get a lot of this background information. So as it relates to the FASB, in August they issued ASU 2021-06, which relates to presentation of financial statements for financial services, depository and lending, financial services for investment companies, and amendment to certain SEC paragraphs. It really modified certain of the language within the codification. If it's not a real deep area, but I recommend that you look over it and see some of the changes to the language that they've used. They have a project on the disclosure of supplier finance program obligations. Phew. They're looking to try and get as much disclosure as possible as it relates to obligations that you have outside and that are connected to different type of arrangements that you have. You've seen that throughout the trend with leases, with revenue recognition. They're trying to make sure that as much disclosure possible. If you look, kind of reminds you how IFRS went over the years with disclosure, as much informative transparency as possible. They did issue exposure draft on fair value measurements of equity securities subject to contractual obligations. So if you have equity securities that are subject to restrictions on sale, you should look into that. I know that there are a lot of security arrangements out there. That's for the people that do business valuations, you look to have certain restrictions on sales as it relates to the valuation. I'm not going to say even trend or swim in the valuation area and try and say something that's out of school here, so I will just leave it at that. There is more FASB information. Of course, they talked about leases and private companies and the use for risk-free rate. I wanted to give you a little bit of break on leases, although I did just sneak that in there. Let's talk about the AICPA. A lot of interesting stuff at the AICPA. So if you remember, SAS 134, there was a suite of pronouncements that came out between 134 and around 141 that has a lot of information, including EBPs. But 134 is the change to the auditor's report. It's effective for years ending after December 15, 2021. Calendar years this year. Be on top of this. Don't get caught in your peer review not updating your reports. Please address this, okay? That's my one emphasis I wanted to give on that. But what was good was the Center for Plain English Accounting, which is an element of the AICPA, put out a really good write-up on the nuances of 134. Now, I would have liked to share it with you. However, it's subscriber-based, and I'm not allowed to just take the information and provide it to people. But if you are a subscriber of CPEA, I recommend that you look at this document they sent out. It really gives you some nice information about SAS 134 and some background information to it. If you're not a subscriber, you can look into it and talk with other people about it. The Center for Audit Quality issued comments on climate risk considerations, and this all ties in with the ESG, the environmental, social, and governance, and the Journal of Accountancy, which is tied in with your membership. Journal of Accountancy had an article where it discussed the management and auditor's responsibility around climate-related risk considerations. What does that mean? It's very similar to environmental, social, and governance. We're going to start having some sort of disclosures, probably not at the private company level, and I don't see maybe even nonprofit, I don't think EBPs. But the public company level, you're going to probably have more disclosure, if not in your financial statements within the document, your 10K, whatever registration statement you have. they're going to start having to provide certain information. And the auditor, knowing that we have to review everything that's the financial statement is contained in, you're going to have to look at this to determine if there are conflicts as it relates to information within your financial statements. But the climate-related risk, I think, is very important. And a good article came out, and it came out right after the storms hit New Jersey. You know, we had those 2 hurricanes in a row, and how is this affecting the business? And I recommend that you start looking into this as either as management or as an auditor. The Professional Ethics Executive Committee, PEAC, has 2 proposals, one that addresses unpaid fees. And believe it or not, they're actually talking about, okay, what level of unpaid fees should we be looking at? You know, is a year too short? Is a year too long? So it's actually an interesting analysis that they're doing. They also have a proposal out to address a standard for implementation services. What the heck does that mean? Because I can't even say it. What does that mean? Well, a lot of clients will call us up, especially the smaller clients, you know, closely held companies that have limited staff will call us up and say, we need help implementing certain new standards that are coming out. And now we as an auditor have to say, whoa, we can't do it because we're not independent, especially when it relates to GO and SEC. And the guidance that they're trying to come out with says, okay, you can help them provided you don't make management decisions. Now, most clients are looking to us, especially the closely held companies, are looking to us to be the trusted advisor to help them along. And I think it's really good that the PEAC is addressing this and looking at this and starts keeping in mind some of these, the way that the clients look to us as a trusted advisor. If you don't listen to the PEAC podcast, I strongly recommend that you look into the AICPA Professional Ethics Executive Committee podcast. They issue them regularly, and some good information for you to keep up on. And this isn't just somebody in public. Remember, ethics addresses those in industry as well as those in public practice. Okay. Some other areas, the PCAOB, they didn't want to be outdone by the AICPA and FASB, so they did come out with a couple of proposals. Actually, with a proposal, and they adopted a rule. A proposal for the requirements of a lead auditor and the use of other auditors. Okay, it's just a proposal they're starting to talk about. They actually had a meeting recently. You can look up their notes on it. And they adopted a rule providing the framework for HFCAA. Okay, Holding Foreign Companies Accountability Act. So if you're dealing with a domestic subsidiary or if you're dealing internationally, I strongly recommend that you look into this information. 2 other things that I just want to bring up. Some recent news had come out of that the DOL issued a statement that they are going to be looking into, or reviewing, not looking into, they're going to be requesting and reviewing and examining employee benefit plan audits immediately after the filing deadline, which is October 15th. Put aside the fact that the IRS has extended things. Shh. Don't tell our clients that they've extended the due dates till June 3rd, because I really don't want to work past October 15th, okay? But even for the EBP audits, well, the DOL said that they're going to start examining some immediately after. So please keep that in mind if you're doing employee benefit plan audits. This comes on the heels of a Wall Street Journal article where they severely attacked the effectiveness of the peer review. So keep this in mind. Some information that you should be looking into. Look at the some of the news that's coming around. And I will end this episode by highlighting several New Jersey Society resources related to ESG, which I just mentioned before. There is a replay of a great panel presentation on October 6th on what CPAs need to know about ESG. It's free for NJCPA members, and it's 1.5 credits. Register at njcpa.org/plus. The NJCPA has partnered with the Institute of Management Accountants on their survey about inclusion of climate change in companies' risk management plans. Get the link to participate at njcpa.org/hub/ESG, where you'll also find numerous articles and resources related to ESG. Also, I encourage you to join the NJCPA Accounting and Auditing Standards Interest Group by going to njcpa.org/groups. Thanks for joining us. We'll be back with a new A&A episode in 2 weeks. You can access all IssuesWatch podcast episodes at njcpa.org/IssuesWatch. Did I mess that up and leave S's in there? Don's going to kill me. I don't know. Are we still recording this? Are we still going?